I think the impacts we see on a daily basis are happening more so than other parts of the valley. I mean, we're $60,000, $70,000, $80,000 more for the same house. When interest rates go up like this, people are still willing to pay more on a monthly basis for the homes here in Boise.
Where are interest rates going to go in the future? Where at the beginning of this year, we knew it was coming, but this is probably a little bit worse than expected.
For sure. Okay, so want to start off, we haven't had an opportunity in a while. There's not a bunch of big news to talk about, I'd say, other than at the end with some interest rate stuff that actually is getting a little bit scary. So for all of you guys who think we're just always giving positive news, we'll have some negative stuff that we're actually a little bit worried about towards the end. But want to take this time to just talk about a lot of details, things within the Boise real estate market that we see on a daily basis that we're seeing coming up. Just to give you guys more literal insights on like the little things going on in the valley.
Yeah, I would say there's still important or even big updates, but not necessarily like data market market statistic type updates. But very important for all of you that live here or that are of course thinking of moving here, and some of those being community updates, commercial amenity and infrastructure updates and things like that. So I guess to kick it off, an easy one, but also one I think we've talked about a lot, but and exciting for a lot of you that live in the south part of Treasure Valley, the Costco in South Meridian in Kuna. If you have not driven by there yet, you're going to be surprised. It's going up. It's going up quickly. I think they're still targeting this year. Is it?
Yeah,
this
October.
Year? October of this year. Yeah. So. My goodness.
With how fast they're moving, like for a while, I was like, I don't know if they're going to make that because they hadn't even broken ground. But now if you'd go drive by it, that thing is popping up fast. So that's on a little scale, right? Like that is going to affect the entire south side of the valley. And we're probably going to talk a lot about South Meridian, Kuna a lot here because that's where a lot of things are changing and a lot of, I think the impacts we see on a daily basis are happening more so than other parts of the valley. Just because it is kind of the hot spot in the valley. And I think before too long, similar to I remember when they built the Costco in North Meridian. It was like 1 year later and all of a sudden like everybody lived there, right? Like we will see this in South Meridian, I think once Costco's done, because there's a lot of new communities coming to that Kuna South Meridian area.
And part of what we'll talk about here in a second is a lot of communities that we've been really praising over the last year are darn near finished, and we'll go through some specifics on that. But with those finishing up, there is a lot of new ones starting soon. I mean, there's going to be a gap, unfortunately, and that's where, as active buyers right now, something to keep an eye on. But that area, including the Costco coming, are going to continue to grow, and that Costco, like we've talked about in that particular video, is going to bring other stuff around it, not just housing.
And I think with what you're talking about, a good point to start on is inventory. So for those of you who have watched the channel, at the end of last year, we talked with Ryan, the president at PLH. We've talked on other market reports, how builders didn't put in as many permits at the end of last year, meaning they weren't building as many houses for quick move-in homes, so homes that are finished and ready to buy for spring. And we're seeing the effects of that majorly. I mean, I can name a bunch of communities right now: Lugano Terra, Bolaro Springs, Ashton
I'd
Estates.
say worse because we knew it was happening. Like you literally look at the numbers and the permits were less. I think it feels worse right now than we probably would have predicted because those communities you mentioned and the others ones that you will talk about, there's almost nothing finished within the next 1 to 3, almost nothing within the next 1 to 3 months available. You have to go further out, or you have to build if there's even lots available.
I think CBH is the only one that has inventory, and even CBH
is less.
And so this creates an inventory problem, which is it's always supply and demand, right? Like, is there the supply to support the demand? And there hasn't been. So Ashton Estates, Lugano Terra, Bolaro Springs, Oakwood Estates by Trisidio.
Caspian, which we've done, actually, we've done a video on, so still in that South Meridian Kuna corridor. It's the exact same scenario for them.
I mean, in all of these communities we're naming, there's literally, I think at the most, 2 homes available, right? So whereas last year, you had 5 to 10 different homes available to go look at, to buy and move in now. And what this has caused is a lot of price increases in all of these communities. And so we said we're going to talk a lot about the south side of the interstate because this is where it's most apparent. This is also happening in other parts of the valley, like Cherry Grove by KB Homes in North Nampa. That's another one that multiple clients looking right now in that area. The only option even to build is to build on lots that aren't even released yet. Like they have no inventory and they haven't had inventory for a few months now. So it's not just south.
Like you said, across the board, communities in Star, a few Richmond American homes, they have one quick move-in, the rest are literal build jobs. So that's where we're seeing our active clients having that gap where it's either a few options of homes right now or a quick move-in that's going to be finished in October to December, or you start building, and right now it's June, and finish in December, January timeframe. Which we didn't have that last year. Last year we had the ability to look at many more quick move-in homes, and again, we knew it was coming, but this is probably a little bit worse than expected.
For sure. Yes, I would say so. And how this is worse for everybody is the prices, right? Like it's affecting the prices, not just the options that you have. But in some of these communities, like Lugano Terra is an example, at the beginning of, or the end of last year, I mean, we're $60,000, $70,000, $80,000 more for the same house. Like you look at a Davenport RV by Tersidio, and what was an inventory home at $750,000, to build that same home, you're now in the 800,000s, pretty much guaranteed.
That's a big jump. I mean, it's been 6 months. It's crazy to think we're halfway through the year, but for all the if you commented or did, for all the people that were maybe disagreeing with our prediction, I mean, we can show you legitimate base price from this month, base price to this month. And that big of a jump is not across the board. I mean, this community had continued to really pop off when we first, or earlier when we highlighted it, and throughout the last 12 months. But across the board, we're pretty much seeing most new construction going higher right now.
Yeah, I mean, from on the smaller scale, right? Like some Hayden Home communities, they did a $10,000 price jump last week. They've done, I think, 2 others or maybe 1 other price jump the rest of this year, but on a $400,000, $500,000 home, that $10,000 is a big jump, right? That's not insignificant, and it's across the board. If you, like, we do this on a daily basis, right? Or for those of you who do look at homes, one thing I like to do is I'll put the budget at 400,000 and then just zoom out on the community. And if you look at the entire valley, there's almost nothing under 400,000 until you get into Canyon County. Whereas 6 months ago, there was still quite a few options. Like there'd be 5 to 10 homes in Kuna or Meridian that were under 400,000 or around 400,000, and now it's just not even a possibility. And so we've talked about this in the past a lot, but those are the first homes to go when you are seeing a price increase. And it's interesting for Boise because the rest of the country, you talk to everybody, and their home prices are going down. So it's very unique. And as a reminder for everybody who hasn't watched these market reports, it's the other states continuing to just do things to make them miserable to live in. So it's pushing people here. It's Micron. And it's also just Boise's a desirable place to live, and the economy's growing here versus other places it's not necessarily.
And I know we talk about it a lot more in our community videos, but to your point, more and more people are still being forced out of where they're living, but they come here not just like, okay, this is better in this aspect or this aspect. They actually love it here.
Yes.
And that's where we have clients that spend time back and forth. Maybe they're still working in California, Washington, Texas, or they have homes in both. And they're like, honestly, I don't know why I don't just come here full time. They've already changed over their taxes, their voting, all that stuff. And they're like, I don't even want to go back. So desirable area on top of being a lot of the things that people are not enjoying in the states they're leaving.
Yes, and with that, I don't know if you've noticed it this year, but there's been a lot more families where it's not just one person moving, it's the parents, the kids, the sister, the brother-in-law, like it's the whole family is moving all at once because they are getting forced out. So, and to touch on just like the market as a whole right now, what we're seeing on a daily basis, the market is still busy here. It's not like right before the war started busy where we had bidding wars and you are missing out on homes, but it's still busy enough that you do have to move fairly quickly on a lot of these price points in homes. There's always going to be some markets in some parts of the valley that are still slower, but in general, I mean, I think for the most part, as a team, like all of our listings, the buyers we have, it's still a busy market.
Yeah, definitely. A lot of buyers, a lot of shoppers. Beginning of May was a little bit slower, which is partly seasonality. And then the second here locally, schools went out, Memorial Day finished, Mother's Day. After all of those three things, it was that floodgate opened back up again. And so far, end of May into early June, a lot of people visiting, a lot of local people trying to make moves, buy, sell, invest. So
yeah, which is very in contrast to last year. Like I feel like last year during the summer real estate market in Boise, inventory was just building.
Yeah.
Right now, it seems like it's remaining fairly even. Like the new inventory that comes on the market is replacing the homes that have sold. It's not necessarily building like it did last year.
Yeah, for sure. And that's where it's kind of interesting, and we'll touch on the interest rate concerns here in a second, but interest rates haven't really changed that much. So that's where, the people out there pushing like, how is it sustainable? Interest rates are high, how are people affording this? That is a legitimate question, but they are, and they're figuring out how to, and it's not just out of state people. There are a lot of local people as well that are buying at these prices, selling a home at a 3% interest rate and moving into their next home at a slightly higher interest rate.
Interest rates have gone up. They have changed. They've been higher.
The
highest they've been in over a year.
That's true.
We still have a busy market, right? And we'll talk more about the interest rates because there's some things coming that are concerning for sure. So the other thing I think, just going into more detail, is when we're talking about these price increases, in the past we've said, a lot of times the incentive is the first thing to go. So these, $10,000, $20,000, $30,000 that these builders are offering to lower your interest rate, to pay for closing costs, to pay for your design studio if you're building. In the past, those things would have gone away first instead of prices. But what we're seeing is that the base price of build jobs or even just quick move-in homes are getting their prices bumped up, but that incentive is still remaining. And so it's been a unique thing, and we're seeing that still on a weekly basis.
For sure. Yeah. And one thing, and this is where, whether it's us or your other, any other trusted real estate agent that you guys, have interviewed and rely on, don't just automatically assume when you see a price change or you see an incentive change, it's because the market's going up or down. So we know specifically builders here that we work with often, they are making adjustments. They're tweaking their marketing strategies, where they're like, hey, if we have a $25K incentive, what if we just lower the price and remove the incentive? That price drop doesn't mean they're desperate to sell the home. They're just moving around money to see what helps sell homes faster. And then the other piece to that is these incentives more and more often are being tied to the builder's preferred lender, or the builder owns a lending firm themselves. And so those are also things that, where if you guys reach out or are looking at stuff online without having some local expert advice like ourselves, you might not realize the fine print, or they might not share the fine print with you. So luckily, we're doing this on a day-to-day basis, so we know these things, we know the questions to ask and the things to look for. But if a builder's marketing $25,000 incentive and you're paying cash, that might not apply to you. So just as an example, but and that's where, through these videos, in the comments, or just directly on the phone number, reach out to us. We're always happy to chat. We've had a really good mix this year of people reaching out a year to 2 years ahead and starting to make plans or starting to visit. We've also had a lot of people that call us and be like, we're going to be here this weekend, and we find them a home and get it done. So whatever your scenario is, don't hesitate to contact us.
Yeah, for sure. Yeah, we look forward to meeting all of you guys. And even if you just want to chat and talk about the real estate market or talk about your situation, but you're not ready to buy or you're not ready to sell, still reach out to us. And while we're on this new construction incentive one, a reminder for everybody, new construction, still use an agent. It doesn't have to be us, but make sure you have representation. These builders, most of them aren't going to give you some sort of discount for not having an agent. And they're paying real estate agents on the buy side. So you don't have to worry about that, and you have representation. And I'd say especially this year, when we got all that rain in the spring, there was a lot of mold issues we were having. We've had a lot of builders in the valley starting to go more corporate, than they were in the past, even just year. And I've seen how important it has been to have a real estate agent representing you, because especially as these builders go more corporate, they're going to steamroll you and tell you that they can't do anything. And so you need somebody on your side to be fighting these things.
Yep.
Going back to what you're talking about with these incentives, the other thing about that, about having someone representing you, is having the knowledge to know that like you can push or find a different lender. You don't have to use that builder's lender. And a lot of times what we find is, even if it's $10,000 that they're offering if you use their lender, the lender, Brady Gormley, that we work with, he's beating out those lenders without the $10,000. So you're getting lower quality service because a lot of these lenders are just giving leads to the builder. So they don't look at you as their client. They just look at you as, they get paid by the builder a salary. So they're not necessarily motivated to take care of you in the proper way. And we've had quite a few deals almost fall through over the last few months because of people deciding to use those lenders. So you get better service, the same or better rate, lower closing costs. So don't feel like you're stuck and pinned to using that lender, because we're seeing that a lot lately.
Yep. Yeah, exactly. Yep. Explore multiple options, especially if that particular builder is forcing incentives through one lender. You just never know. It's worth checking. Yep.
Yeah. Another detail thing, 10 Mile District, for those of you who haven't driven by, they broke ground. So from my understanding, the Lifetime Fitness and Super Target are going to be built first.
Super Target.
Yeah, Super Target, which is new to the Valley, right? So we'll see what...
Intimidating.
And then I think the In-N-Out is now approved again. So,
is it? Oh, okay.
Yeah, it was denied, approved, denied. Now it's back to approved.
I don't know why they ever deny. Those things always get approved at some point. They just have to make small tweaks. But in any case, you just have to try like 10 times, and then eventually someone's going to give.
Oh yeah, eventually they'll get it through, right? Similar to the Costco that should be coming to Eagle. It's denied right now. Eventually it'll get approved. But that area again is affecting that south side of the interstate. And this is where I want to start talking about some of the new things coming. So right next to the district at 10 Mile across the interstate, CBH just started their new community there, which is a really cool community. They haven't built the homes yet that have the view lots, but there will be some really awesome homes that you have a full view of the entire valley. It's actually really beautiful.
I mean, we were out there, I don't know, 6 months ago, our 10 Mile district at 10 Mile update. So there's some clips in there where you can see what it overlooks. Yeah, really cool spot they have.
Yeah, so that's a new community that is available right now. Tresidio Homes is having a new community coming just a little bit south of there. I think it's Amity and Linder, right around that area. And that is going to be a big master plan community. So that's coming. And then Kuna has a ton of new communities coming. So there's going to be another Tresidio community. Pacific Lifestyle Homes, I've heard, is going to be having one in Kuna for the first time.
It's ready to sell, but reserve sell.
Okay.
Yes. Yep.
Nice. Yeah. So lots of new stuff coming to that area to kind of hit on what we started off with, which is the Costco, the district at 10 Mile. We're starting to see this take off, right? So we've been talking about this for a year, 2 years now, where Kuna and the South Meridian area is the next hotspot. And now we're at that point. Like, the things are here. It has arrived. Prices are starting to catch up to, in some cases, they're the same price as Star, which is crazy.
Yeah. Yep. Yeah, like you said, prices are getting up there. We're seeing what we talked about it briefly in some other clips. We're seeing the lack of that mid-luxury, as we call it, home. And now those are coming. Now there's more of those than just the Garnatera and Patagonia coming to Kuna. So we're seeing those come up, and that's going to really be exciting for a lot of you buyers that are looking in the South Meridian area. Because like a lot of you that live here or that have visited recently, it's not that far from Meridian. I still love those first calls where we talk through and they're like, well, and I ask, I'm like, how far do you think it is? Like, if you're looking at a map from Kuna to the village, people are like, I don't know, 45 minutes, an hour? Like, not even close.
Nope, not at all. Yeah.
But yeah, those areas are growing like crazy. And this doesn't even include the Micron influx that's going to happen in South Boise through to Kuna. I think people are, now that they can visualize this insane building, plus more of those, people are starting to really, really understand the impact that that's having in this area. And even other things like in Harris Ranch, they're finally developing out their local little shopping center and community in the center of Harris Ranch. So the growth out here is bringing in a lot of new things, which we're trying to keep up to date for you guys.
For sure. Yeah. The only other area before we jump into interest rates is like the north end and the bench of Boise. I'd say it's back to being like the desirable spot in Boise.
North end for sure.
Yes.
Pockets of the bench. I mean, it's still a little slow, very quick, but north end, I mean, 2 years ago, it was like dropping people, and I don't know why, but people were like leaving actively. Now, I mean, it's insane. You've had clients looking out there, and we're talking
we missed
blow
out.
your mind over list price offers.
Yeah, we had a couple homes sell for $200,000.
$200,000 over.
Yes.
Yeah, that's crazy. Yes. And that came out of nowhere.
Yeah, and they missed out. I mean, we had offers out, 5-6 homes missed out on. So that's another area of Boise that we're seeing a huge influx right now. Okay, now the interest rates, kind of, I think, the negative side of things and what we're seeing. So we'll talk about interest rates as a whole, but to kind of get a picture of what is happening so that it makes sense. First of all, interest rates have gone up a lot since the beginning of the year. We were into the 5% range, like 5.9. We were just getting there, and then the war started.
Briefly, So I don't even know.
I think it was the same week.
Yeah, I think it was a few days or a week.
Yeah.
And honestly, I mean, in hindsight, if it would have stayed there, this market report would be
way different.
Yeah, a lot different in terms of us talking about price increases. But they have gone up back into the mid to high sixes, give or take on the day.
Yeah, I think today they're at like 6.65.
Yeah.
But they've hovered between 6.6 and 6.8. So high for sure. Still not as high as they were a few years ago, but they're higher right now. So that obviously makes a huge impact. And it reminds me of something when interest rates first went up. And one of the things is when interest rates go up like this, people are still willing to pay more on a monthly basis for the homes here in Boise than they were 6 months ago. So even though the prices have not gone up as much as they probably would have if interest rates were lower, the market is still going up because people are still willing to pay more on a monthly basis. And at some point, all of these people will be able to refinance. But the point being is that even with interest rates going up, the market is remaining busy. So that's to start with interest rates. We talked about how this happened the same week that the war started. So the war obviously has had a huge impact on these interest rates.
And that's where it's not all sunshine and rainbows for the market here in this area. And this is where there is some legitimate concern that we have that obviously a lot of people share across the country is where interest rates going to go in the future, where at the beginning of this year, there was a lot of confidence and sentiment that they would start to tick down. Then, of course, the war happened, and that is starting to is quickly changing direction on terms of where the federal interest rate is headed. So the war has been impacting, of course, our economy, specifically gas and commodities that are similar and tied to that. And that is causing inflation numbers to potentially go up. And then on top of that, the most recent report is jobs have actually been increasing significantly higher than what they predicted. Both of those things lead to the Fed considering to keep inflation under control, considering increasing interest rates, where at the very beginning of this year, there was a majority of people saying interest rates are going down. Now we're looking at a potential interest rate hike at the end of the year. It's still like 50-50, so a lot of things could change, but that's a drastic flip from what we were originally expecting. To see the Feds possibly raising rates is not great for mortgage rates. Which again, as a reminder, the Fed fund rate, so what everyone usually sees on the news, that's not actually what impacts mortgage rates. We technically could see the Fed fund rate go up and mortgage rates go down. It just depends how the economy is as a whole. Bonds are what affects the mortgage rates. And bad news for the economy is typically good news for mortgage rates, which is confusing. And this is where this market has been very weird because the war and gas prices, gas affects not just your vehicles, it affects all production. They use
oil and gasoline to make plastics, which is in everything, right? So when that goes up, the price of goods goes up. So it raises inflation in a atypical way, right? Like this isn't inflation because there's more money coming into the market. This is a literal, the cost of goods goes up because of the price of one of the commodities for it. And so you would think that interest rates would go down because that's bad for the economy. But we have job reports that are really good. The S&P 500 hits all-time highs during this. So it's this weird mix where typically we'd have interest rates come down, but the economy is, whether it's artificially being propped up or not, it is keeping interest rates high. And so it's a very weird market. And I think this is where the concern at least comes in for me, is something's not right and something I feel like is going to break at some point. Whether, I mean, my hope and prayer is that the war ends, we can get a peace deal done with Iran, gas prices go down and the economy continues as it should, and then we can see interest rates hopefully kind of level out and come back down. That would be the hope. Right?
Yes. What, if or when that happens and what happens in between is anyone's prediction. But like you mentioned, the mortgage interest rate side of it, very uncertain. A lot of volatility. It goes back to what we always, say and believe in for ourselves, for our own purchases, for our own families. If you're able to, now is the best time. You can't predict what's going to happen in a year from now. Home prices might drop. Home prices might skyrocket. If you're able to now and it's in your plan and goals, then you should thoroughly consider it, and not let the fear or the excitement of potential reward dictate, because none of us can predict the future.
No, and I mean, if you're not, it's a little unique. So for those of you who are local, it's purely just a personal, like, monthly expense versus the home you need, right? Like, don't go buying a house just because you want to buy a house. Like, if you need a house, then you should still buy the house. I don't see there being anything, and you're not going to time the market. That's almost impossible to do, and it usually goes very poorly. If you're moving here, it's one of those things where it's the value and the day-to-day life that you live. I mean, every week we get off phone calls with people who are anxious. They don't want to leave their house. They're, you're paying crazy taxes. So, like, factoring in everything, are you still in a better situation buying a house or moving to another place, right? And this can apply for you guys who are local too, is like, are you in a better position if you decide to sell your home and buy a new one? That, at the end of the day, is the question. We're giving news that is, like, potentially bad in the future. That it could go the other way, but this is potentially bad. It's not bad enough that I'd say it should affect your guys' plans necessarily. You want to take it into consideration, and on a personal level, like, I'm even taking it into consideration right now. Me and my wife, we're moving into a new house, and we're deciding whether we want to keep our old house or sell it. And I'm using it as a data point to decide. That's a little bit more on the investment side of things, but it's a factor just to keep into play.
And with, again, the unpredictability, I mean, I think we're all pretty confident at some point the war is going to end. So what we're seeing in gas prices and what that's causing inflation-wise, at some point, that piece is going to come back down. The other factors that are affecting either mortgage interest rates, or specifically the bond market, or Fed interest rates, we'll have to see how that shakes out. Again, we've mentioned a little bit, new Fed chairman, that could change things one way or the other. So a lot of things potentially happening, but overall, there is definitely a legitimate concern as to what the interest rate situation looks like and the overall economy if some of these things continue being, again, so out of place, with stock markets skyrocketing, AI specifically, inflation going up, jobs increasing, and what is the fix to all of those, or what's going to break first, and how does that impact us here in the Boise area?
Yeah, and I think that's a point to where, like, don't let interest rates be the deciding factor, because interest rates being higher is actually good news. Like, if interest rates plummeted again, it would mean that we're in a depression, probably. Like, if we saw 3% interest rates, it would mean that
the economy is hurting.
You'd be worried about finding a job, right? Like, that would be the situation, and you can never prepare for that, right? Like that's a nuclear plan or an end of world plan that it doesn't, you can't have a plan for that, right? So that's part of it. And the other side of this too is two things. So one is, I think there's it's less likely that interest rates go up and we go into a huge depression over the next year or two, and it's just mayhem, right? Than there is of the Boise real estate market continuing to slowly tick up. I don't think in the next 12 months we're going to see an influx of, a 15% price increase necessarily, right? Unless this war gets over. But so I want to say that first. The other side of this is the alternative to buying is always renting, right? And with renting, this is where I talked about earlier, like it just comes down to your monthly finances, what you need. But rental prices are not going to just all of a sudden plummet if the price of homes plummet. So on a monthly basis, you still have to pay for housing. And as long as you're having a long-term approach, which in real estate, you should almost always have a long-term approach. It should never be, I want to keep this house for a year and I'm going to make a profit. Like, as long as you're buying a home that you want to live in or an investment that you want to hold on to for 5-7 years, the history of the real estate market has always shown that if you hold on to the real estate for long enough, you never lose money. I mean, literally never lose money. Like even in 2008, if you bought a house in 2008, it took until 2012 to be right back to where you were in 2008. So it a long 4 years, but it came back up. Exactly, right? So, and that is the worst real estate dip in history. And it didn't even take 7 years to get back to where you started in 2008. So the point is just taking this into account is like, yes, you want to be smart and know what's coming and take it into consideration. But at the end of the day, if it's better for your family, if it's a situation that improves your life, and you do plan to hopefully hold on to things for 5 to 7 years, then you should be okay.
And on the rent side too, I've been seeing more and more often and hearing from a lot of you all that end up reaching out and connecting with us. If anything, the gap between out-of-state rent and local rent here, that's closing faster than home prices. Some states we've mentioned, we have people selling homes, and unfortunately their markets are softening in terms of real estate resale. But rent, that gap is actually closing faster than I would say home prices are. Some of the apartment rents that you see here in Garden City, downtown Boise, or in that area, I'm blown away that I'm like, that's Southern California. And that's rent prices, where our homes are obviously not Southern California priced homes yet. So if anything, the rental market's even harsher for you guys, which is rough. But something we keep an eye on as well.
For sure. Yeah, that's definitely something good to take into account. And at the end of the day, I mean, reach out to us, talk to a real estate agent, talk to professionals, get advice, and because every one of your guys' situations is always different. And a lot of times there's always a solution to the problem. So we'll see what happens over the next 6 months.
We'll be here to update you.
Yes, for sure. And hopefully there's some new changes later, that hopefully the war is over and the next market report is, amazing news. So we'll see what happens next month. For now, watch this video here where Jesse goes through and gives updates on things in the Boise area that are coming, a little bit more detail. We touched on it a little bit, but that's a good one to talk about. But thank you guys for watching. Hope to meet you in person.